Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So, just before we focus on Japanese candlesticks, this is a quick description of technical analysis. So, just to remind you that technical analysis is the study of market action through. Prices reflect all information available on the market. Technical analysis studies historical price with volume data with a prospective view, and technical analysis focus on price evolution itself and not the reason behind the evolution. So that's it for the description of technical analysis. As we present technical analysis in your first webinar, so we don't waste our time on global definition of technical analysis. Today we focus on Japanese candlesticks. So we are trying to understand Japanese candlestick, but this presentation will be brief, as Japanese candlestick topic is a really wide topic, and I'm not a specialist like Steve Nyson. So the main target of this webinar today will be to understand basis of Japanese candlestick, and to see from my view, I insist on that, from my view, the best Japanese candlestick configuration. So just to see the history and definition of Japanese candlesticks, the Japanese began using technical analysis, using Japanese candlesticks to trade rice in the 17th century. As I said, Steve Nyson is credited with popularizing candlestick charting. He has become recognized as a leading expert on the interpretation. Japanese candlesticks charts are simply a new way of looking at price. I mean that Japanese candlesticks are pretty similar to bar chart charts, because with a bar chart we have the open, the close, the high and the low of the day, but we don't have a body. We will see just after. So that's why I say that Japanese candlesticks are pretty similar to bar charts. And Japanese candlesticks don't involve any calculations. So a quick introduction to candlesticks. To understand Japanese candlesticks, we have to see how they are shaped. Okay. So take another one. Okay, so you have Japanese candlestick. You have the body. The body. The candlestick chart displays the open. So on this white Japanese candlestick, the open is there. Okay. Displays the high, the low, and the closing price. Just there, in a format similar to a modern day bar chart, as I said just before. So the spread between the opening and the closing price, okay, is called the body, and seems like a candle, as you can see. The highest and lowest price are represented by a vertical line, so this one and this one, okay? And the interest of Japanese candlesticks with the different color. So when the Japanese candlestick is in white in this example, means that the close is higher than the open, and when the Japanese candlestick is black or red, depends your trading platform, depends your technical analysis platform. You can see black and white candlesticks. You can see green and red candlesticks, but in this example, it will be in black and in white. So in this example, in black means that the close price is lower than the open price. So with the color, when you see a global chart, the main color of the chart enable us to know the relative force of the trend. If you see more black candlestick or red candlesticks, means that the sellers are stronger than the buyers. But we will see a candlestick configuration just after. So that is for introduction to candlesticks and to understand how the Japanese candlestick is shaped. So now we saw how Japanese candlesticks are shaped. The most interesting thing to see is the major candlesticks pattern. Just to be clear, as I said earlier, I present you the best Japanese candlesticks configurations pattern from my view. There are a lot of Japanese candlesticks pattern, but usually I focus on only some configuration. So I present you my best Japanese candlestick configurations. So the first one is the doji. How to understand the doji? Ideally, but not necessary. The open and close should be equal. So means that you don't have anybody on the Japanese candlestick because the close is the same that the open price. So nobody. This usually means that a top or a bottom had just been hit and a reverse trend is liable to occur. I mean that if you have, imagine that we have a bearish trend with several candlesticks on the downside, and you see this kind of pattern, and you see the doji. This doji means that you have maybe a reverse trend. So maybe because you have to wait the next day to know trader position and the trend of the asset. I mean that you can enter a long position or to close your short position because the trend just before is bearish, just with the doji at the end of the day. You have to wait the day after to see if the doji is validated or not. So it's very important to insist on this point because it's a main error mistake of several traders when they use candlestick pattern. It's very important to wait the day after to confirm the candlestick pattern. So in this example, if you have, take another one, if you have a bearish trend, okay, several candlesticks on the downside, you have the doji, and if the day after you have an open above the last close. So if you have an open in this area, to be clear, the doji will be validated. So the alert on the dojis when you have the doji is confirmed with the open price above the closing price of the doji. So just there you have the doji which is validated, and you can enter a long position or to cut your short position. Okay.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.